Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. My goal is to help as many people as possible become independent and profitable traders within the foreign exchange market. So, if that's something that you're interested in, you are going to want to make sure that you hit the subscribe button and hit the notification bell so that you never miss a notification when I do go live. So in today's quick video, I'm going to be showing you guys how I use support and resistance when I'm trading binary options, which is pretty much a quick style of trading where you can essentially make your money in minutes. Now, the website I'm going to be using today to demonstrate this is called PocketOption.com. And Pocket Option is really a great asset when you do want to start to trade binary options. The user interface is easy to understand, and it has all of the functions that you need to make money in minutes if you do choose to do this style of trading. So I'm just going to go over a few quick features on Pocket Option that we all need to understand if we are going to take on this style of trading. So the first thing we need to do is select our currency pair, which you'll find on the left side of the screen. It'll see a dark blue box with all of the currency pairs listed here. Now, it's really at your discretion which currency pair you're going to trade. You can switch it up, but I would just say make sure that the payout, which we can see right here, is at least 80% so that we know we're getting a great return on our investment. Now, what this means is that we're going to get a percentage back based on what we choose to risk. So before we get into that, first we're going to choose our time frame, because with binary options, you can make your money in minutes. Now, this is a high risk level of trading, but once you practice and you understand the fundamentals of price action and you get a few indicators under your belt, this will become easier and easier every single day. Now, the lowest time you could be into a trade is 5 seconds, right? But I really wouldn't recommend that because you're not really giving the trade a chance to play out and to go up and down like the market typically does. So you can be in this trade for 15 seconds, 30 seconds, 1 minute, 3 minutes, 5 minutes, and all the way up to 4 hours. Now, personally, I like to trade on M1, and this means I like to take my trades. I like to be in and out with the bag in as little as 1 minute. Now, the second thing you're going to need to choose is your amount, which is how much you're risking. Now, a really cool update that Pocket Option has added is you can either do this in the form of a dollar amount or you can do it in the form of a percentage. So once I actually click on the dollar sign, this switched to a percentage. And if I only wanted to risk 1% of my account, I can see that that's $5. If I wanted to risk, let's just say $20, and I didn't know what percent of my account that was, I can see that $20 is 4%. So let's just say you want to trade by percentages. Pocket Option does give you the chance to do that. Now, again, let's just go back to the payout. We can see that Euro JPY's current payout is about 87%. And what this means is that if we were to put $20 into this trade, right? If we were to put $20 into this trade, which is our chosen risk because you're in control of this, with the 87% payout, this means that the total payout will be $37.46, but we're actually making $17.43 of profit. Now, you don't have to be a mathematician because they've done everything for you, but this 1743 is actually 87% of $20.03. Now, the reason why you see two numbers is because if I enter this trade, I'm risking $20.03. If the trade goes in my favor, no matter whether I'm going for a buy or a sell, I'm going to gain $17.43 profit, but I'm also going to get back my initial investment as well. So before we actually take a trade, setting up support and resistance, let's do an example. So the green button is for buyers and the red button is for sellers. I'm going to click the red button, right? So once I click this button, you can see that my account balance went from $50,075 to $50,055 because my $20 has been entered into the trade. Now, with Pocket Option, if the trade does not go in my favor, meaning I got in for a sell, my entry point is 460. If the market stays under 460, by the time this runs out, I'll make that 37.46, which we mentioned earlier. So not only will I be getting my $20 back, and let me just clear this for a second. Not only will I be getting my $20 back, but I will also get that $17.43 of profit. Now you'll notice that the market is going to be going up and down up until the very last second. So anything is bound to happen. And as we can see, we did not clear this trade and we've lost $20.03, right? We're not going to lose the full 37. So that's why it's important to actually understand support and resistance so that you're not just randomly clicking the button based on what's currently going on. So the reason why I chose to do a sell impulsively is because this is the mistake that a lot of people make. They'll get into the market. They'll see that the market has a strong red candle, as we can see. We'll see that the market had a strong red candle, and we'll say, hey, let's just get in for a sell. But understanding support and resistance will let you know areas where price will actually turn around and buy, like here, or a place where price will actually sell, like here, right? Support and resistance are those areas where you'll see a lot of people buying and selling in the same zones. Now, how do we identify, before I add these lines, now, how do we identify support and resistance? Now, there are a few different ways, but I like to go by the wicks. These things, these price action snapshots that are forming, they're actually letting us know whether the market is going up or down. The blue candles mean that price is being pushed up by the buyers, and the red candles mean that price is being pushed down by the sellers. So you'll notice sometimes the candles will appear more flat, like such, which means that price isn't debated above or below this price, or you'll start to see the wicks on the candles letting you know that price is having a hard time either getting above a certain zone, which is called resistance, or price is having a hard time getting below a certain zone, like over here, and that is called support. So if we see wicks at the top telling us that price is resisting going any higher, this is called an area of resistance. If we see wicks at the bottom where price is having a hard time going down, this is called an area of support. So in the current market, we can see that we have a lower area of resistance, right? Contrary to the previous high that we were just looking at. So when we're getting into a trade and we're trying to establish a buy or a sell, we want to use our most recent areas of support and resistance because the market is moving fast. We're analyzing the market by the candle, by the minute. So it's helpful to consistently be monitoring and checking these things. So in this case, I would say this was an area of resistance because we get those wicks there. We see price was having a hard time getting higher than this area. But then we can also see after the drop, a new area of support was formed, right? Which was contrary to this area, which we looked at earlier. A new level of support was formed, letting us know this is now going to be a safe area to buy. So to not have to remember all these numbers, what you can do is click on your drawing, which is this little paintbrush, add yourself a horizontal line, and you can actually put it at those support areas. So I'll put that line there. And just so we know it's support or where we want to buy at, I'm going to turn it blue. And then I'll do the same thing for this small area of resistance that we recognize. I'll take a horizontal line, and I'm going to put my horizontal line right where I see those wicks. And I'm going to turn it red, just letting me know that this could be a potential place to sell, right? So now we have our support, right? And we also have our resistance. If we see that the market comes back down to this number, right? And I'll just circle it. If we see that the market comes back down to 429 or anything lower, we're going to hit the green button for a buy. And we're going to say if the market gets to 769 or higher, we're going to get in for a sell because this is our current resistance area and this is our current support area. So a lot with trading, no matter what style of trading you're doing, it really is a waiting game, right? It's a waiting game because you know what your entry points are. You just have to wait for the market to revisit that area. So while we are waiting, we can see that we only have about 45 seconds left in order for this candle to finish forming. And we'll actually be able to see, is the next candle going to be blue and continue to push us in that direction off of the previous support? Or will the next candle be red and resist off of our previous line, right? So we have about 22 seconds left. We're going to wait and see what happens. I would say if the next candle is blue, we can probably get in for a buy. And if the next candle is red, we can potentially get in for a sell. So we can see that the market is coming back down, right? This shouldn't be shocking, right? Because we can see that the market is always going up, right? And then going down. It's going up and then going down, right? That's just what it does. So currently, I'm waiting for the market to either come back down to 429, right? And again, if the market does not come back down to your previous entry point, it's nice to wait. What you can do is move your blue line up to where the current candle is. But again, we see it coming down. And we're just waiting for 429 or lower, or to see if this candle is going to turn blue again. So we see it coming down, right? Sometimes it seems like it's just not going to happen. And then sometimes most of the time, it actually does happen. So we're just waiting for a little bit more of a drop in price. And we're going to see if our area of support is valid to take this trade for 1 minute. And again, we're going to keep the same risk of $20. We can see that our payout has changed to 85%. So we will be making a profit of $17.02. Shall this trade go in our favor, right? So we wait, guys. And again, if you are not a patient trader, you can always move your entry point closer to where the previous candle started. Okay, so we're getting closer, right? We're currently in the 440s. We're waiting for 429 or lower for that potential buy. We were just all the way in the 500, guys, and now we're experiencing this massive drop. And you don't want to get in prematurely, right? You can get in prematurely, but you're going to notice that you have a higher potential of losing your trade. So I'll just show you what I mean by that. If I were to get in now, right, which is way above the entry that I want to get in, we can currently see that my trade is not in profit, right? I said the entry point was 429. We took the entry at 509. It's not good. So let's see what happened when the market actually does come back down to our entry. And if that's going to be a better trade idea, which again, if you're using support and resistance, it usually is. All right. We need a drop. Our 509 entry is not in profit, but we should not be surprised. So what happens when you don't wait? Right? So if you guys were questioning why you cannot or should not take a higher entry, here's why. Trade has closed. We did not make any money. We did not make any money. So again, we saw that the market was all the way down at 538. So based on just our understanding what support and resistance is, we can see that this was a valid area to get in for a buy, because the whole purpose of this is to show you that if the market is struggling to get lower than that, then that's probably going to be a great place for an entry point. So again, I think that was a good example. We didn't get into a trade, but hopefully it's making sense. I'll just go to another currency pair just to give you guys another example of support and resistance, right? So let's just say we came in here to look at CADJPY. The first thing we want to notice is where the wicks are, right? Because wherever you see the wicks or wherever you see there's nothing happening above or below, that's where you're going to want to set your lines. So I'm going to get a horizontal line, and I'm going to add one where I see the flat bottom. So this is going to be my support where I will buy. Again, I'm going to turn that line blue. And then I'm going to add another horizontal line, and this is going to be my resistance. And I'm going to put it where I see the wicks. And I'm going to turn this line red just so we know that this is where we want to sell at. So I'm going to say if the market gets to 154 or higher, that'll be where I could potentially sell because that's where I see the last resistance. And if the market gets to 708 or lower, that's where I would want to potentially buy, right? So currently the market's in the 900s. You would have to wait for it to drop those 200 pips or so, and we can see it push it down, right? We can see that the market is pushing down. So hopefully it does get down to our 708 entry and we can take this trade. And you can be a little flexible with this line, but as long as it's on or around, I'm trying to circle it, as long as it's on or around where the previous support was, then you should find yourself okay in this type of trade. So I can move my line up, right? I can get in at 719. I can get in at 709 because all of those things are in my zone. So we see the market dropping down. It's about 50 pips from where we started. And we're just going to be a little bit patient and give this market some time to drop. I really want to give you guys a real life example of how to use support and resistance because it's one thing to see it, but it's another thing to come in here in the market and to be making money with it. So again, we have two potential entries, 154 for our sell and 717 or lower for our buy. Market seems to be stuck in the middle right now. And again, we don't want to react prematurely. So it looks like it is pushing up towards our sell entry, right? Has a couple of pips to go. It's a waiting game, guys. But you can actually set pending orders on PocketOption. If you don't want to sit here and wait, you can set your pending orders. So we can see the market hasn't quite reached our entry point yet, but we can see in real time the resistance that's happening every time it does get closer to that point. So again, we wait. And again, you can adjust your lines. It's always nice to go with your first entry. We can take this as low as 135. The higher the entry, the better for a sell. Okay. Give us a push up. So yeah, guys, a lot of it is really the waiting game. I showed you in a previous example why we don't want to rush these trades. And what's the point of taking the time to mark up your charts if you're actually not going to wait for that trade idea to play out? So we'll give it a few more seconds. Trying to get to 135. And again, play with your numbers, right? If you see that it's consistently bouncing off one area, you may want to take that entry point. Like here, I can see it's bouncing a lot off of 98000. So maybe that's a lower entry point that we could take. But as long as you're understanding that the resistance is where the market typically will sell at, and the support is where the market will typically buy, I think that this lesson pretty much has been helpful, right? We learned why we don't want to take trades prematurely, and we can see in real time why it makes sense to wait. Okay, so I'm going to give this trade about 30 more seconds. I'm going to let this time play out. And if we don't actually get to take a live trade, it's okay. I want you guys to practice setting up support and resistance on your charts and setting up taking trade ideas when the market is more active and live, because it's actually Saturday right now. All right, we're going to see what our next candle does. And if you find that the market is moving slow for you, the good thing is that you do have all of these other pairs to explore. But patience pays, right? Patience pays. Okay, there are those push-ups we were looking for. We're just looking for anywhere between 135 and 154 to get a good sale. Okay, we're getting some push-ups. Okay. Are we going to be glad we waited, y'all? All right, there we go. There we go. Can we get to 135? It's really struggling. It's really struggling. So if you guys took any lower sells because you can physically see the struggle, I would not be mad at you, right? I would not be mad at you because that 135 is just a guide, but we can see it's getting closer to approaching that number, right? This is the perfect example of resistance. All right, so here's what we'll do, guys. If you set up your support and resistance and you find that you're getting stuck like this, use the 135 as a guide, but just mentally say, okay, once price gets close to that line, that's when I'm going to take the trade, and that's what we're going to do here. Okay, price resistant. We did see if I was just trading by myself, y'all, some of these trades I would have taken, but it's important to show you the importance of patience and why it's nice to learn how to do things the right way, and then you can use your own discretion, right? So the closer my trade gets to that line, I'm like, okay, 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 it's getting there, it's getting there. All right, so let's say I decided to take my sell here. We can click on the trade and see where we took the sell. We took the sell at 0.75. We can see that the market was consistently resisting off of that area, right? And the thing about pocket option too, and I'm just going to do this for example purposes, is that let's say I get into another sell. You can get into this trade as many times as you would like, right? So instead of just walking away with $38 one time, you can end up walking away with $38 three times if all of these trades were to clear in your favor. So that's another cool thing about pocket option too. You could have one entry point or you could have multiple entry points. right? You could have one entry point or you could have multiple entry points. And this just helps you maximize your money. So it looks like our first trade is going to clear. Our balance just went up. We're still in these two trades here. But these two trades were example purposes to show you that you can actually get into a trade multiple times. So whether they clear or not is neither here nor there. Now let's see if we actually get to our 135 entry. If not, guys, we're really gonna pack it up. We're really gonna pack it up. So those trades were just examples to show you that you can take multiple trades on the same pair. But again, if your entry is more solid, then that will give you the confidence, right? Now we see that this is a new resistance area because that's where price has been resisting from. It's all a watch and wait game, right? It's all a watch and wait game. So I'm not really mad at this, guys. This wasn't an official session. This was just to show you how support and resistance works and how you can use it to add to your Forex trading strategy or how you can use it to add to your high frequency trading strategy. So I really hope that this was helpful. Even though we didn't get to take too many live trade ideas, I was able to demonstrate how to use support and resistance in this type of environment. So until next time, rich friends.